Good morning and welcome, Patriot News Hour. Joe and Jason on this Monday. I hope it finds you well. Did you have a good weekend? I know we did. You know what? We had, we had an engagement party that we had to go to. We lounged around. My brother came to town. So, yeah, we did we had the draft and, of course, playoffs, NBA playoffs, NHL playoffs. The Kentucky Derby's coming up. Got to keep you all distracted. For those of you that aren't sports fans, the weather here is incredible. It got really hot here way too early. And we're all, oh gosh, are we going to have the summer of hell? Maybe. But man, this weekend, perfect. It was like 85 degrees. We'll take that all day long. So, nanny, boo-boo, we had really great weather. Other than that, though, not a lot has changed. Not a lot has changed as far as the Iranian thing. Right? I know. We're now starting month 3 of this, and I'm already tired of it. But apparently, Vladimir Putin has been in contact with the new supreme leader that we say is alive, but barely. The stalemate continues. I did love it. They were trying to tell us yesterday there's some good news because Iran gave us a proposal. It was pretty funny. Then I'm like, ooh, right? What could it be? And it was, hey, if you guys stop the blockade, we'll let all the ships through. We'll talk about the nuclear stuff later. Apparently, that did not work. The meeting that was scheduled in Pakistan got canceled. Blah, 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 blah. And, that's where we sit, which is, I guess the same place we've been sitting now for a little bit, which is no bombs dropping, only bombs dropping in Lebanon. And even though there's a ceasefire there, but the strait is closed, the blockade is still on. Something that is interesting, Iran is days away from being forced to shut down its oil fields. And we know that this has already happened in certain countries, Kuwait, the UAE. This is not an easy process. So it will take that much longer whenever this does end for oil supplies to return back to normal. And Iran, it's like 4 million barrels a day. It's a lot. So we'll see what happens there. We do have the Fed this week, the last Jay Powell meeting. I think the Fed gets a lot more dovish after this week. Jay Powell's term ends May 15th. Kevin Warsh slated to replace him, but by all accounts, this will be the last Jay Powell Federal Reserve meeting, so we'll get that on Wednesday. We're expecting no change. And, of course, we get all the others. We'll get the ECB, the Bank of Japan. We'll get GDP. So that'll be something. This will be first quarter GDP. And then we'll also get inflation, the PCE, one of the Fed's favorites. We'll get that as well. So there is plenty to go on when we look at this week. Again, mostly all eyes on Jay Powell's last meeting. And then Thursday, we're going to get PCE and GDP first quarter. So quite a bit of data. Of course, lots of earnings will be coming out as well. So there will be a lot going on this week. But again, most people are anticipating no change from the Federal Reserve. I guess it'll be somewhat interesting to hear what they have to say about inflation, if there's going to be a change maybe in tone at the Federal Reserve, and are we still going to get dissenters on Jay Powell's last meeting? I guess we'll have to wait and see. And then last week, man, this is just insanity. The U.S. government, $524 billion worth of securities that are going to be coming out this week. When we look at the breakdown of this, and it's becoming a bigger and bigger issue for, I guess, the central bank and the Treasury to deal with. As we said, the Treasury's desired level of cash on hand, about $900 billion. And you can kind of think like, well, gosh, that's like almost $1 trillion. It's a lot to have in a checkbook. But then you're like, wait a minute, but you're selling over $500 billion worth of debt to get that done. And of this $524 billion, $480 billion, almost all of it, 4 to 26 weeks. Yeah, the rollover of debt continues to explode. We'll be back after the break. 800-951-0592, Patriot Radio News Hour on this Monday. So last week, the U.S. government, $520 some odd billion, $524 billion, 480 of it, 4 to 26 weeks. Here's the problem now. So they yielded about 366, 367, and the rate that inflation is climbing. Now, all of a sudden, the math on this doesn't work very well, and they're expecting, right, the advantage. Why sell shorter versus longer? Well, the answer is simple. If you borrow it for a short period of time, they get to pay you less, right? Makes sense. And unfortunately, nobody wants to borrow from the United States for 10, 20, and 30 years. Now, there's some, listen, don't get me, it's not like nobody, right? There's money market accounts and really simple accounts that will, hey, we can make 4.7% work, right? We can make that work. But the problem is that's a very finite number. You can't make $480 billion work in 10, 20, and 30 years. No, you can't. You can't make that work on 5 years, 7 years. Heck, I don't even know if you can make it work on 2 years. And as this inflation number keeps creeping up, the worse and worse it looks, right? So, again, I know that we have this whole thing with Iran, which is really oil for dollars, right? We are desperate to get every country to spend every dollar possible on getting all of their crap bought. But Jason, this is starting to get complicated because this is the pattern now. The Treasury is kind of stuck. They started this with Janet Yellen. This is what allowed for any of you that were fortunate enough to get a mortgage below 4%. That's what that did when they did it the first time. So when we first went to zero, they just, oh, hey, and remember, everybody, including Scott Bessent, was one of them. Janet Yellen, you're being reckless. You should have sold a lot more longer-term debt. And you know what I'm starting to think? Maybe Janet Yellen wasn't as dumb as because I was hammering her about this. This is idiotic. Right? We got a 10-year note. We got, you know what? I want to say a 30-year note wasn't even yielding 2%. Let's sell a lot of that. Jason, maybe she knew already then. Yeah, no one's going to buy it, right? We've got to do all of this short-term stuff, and now these numbers are just scary. I mean, $500 billion, $600 billion, $700 billion every single week, and the fact of the matter is the huge percentage of that is rolled over every 6 months. So think about this. In the next 6 months, that 480's got to be rolled over again and again and again and again. Like I said, 6 months, that's the longest of it. The short one, right, 4 weeks. That's only a month.
Well, they're working on it. I mean, there's a war going on that has a lot to do with this, right?
Yeah, well,
all they need to do is force entities to buy more dollars. I mean, that's what's going on in the world today. The biggest, baddest army in the world is trying to push the idea that you should probably be in dollars, or else, maybe we'll send a fleet your way. That's the last play, but it's a strong one.
You know what? It may be. I think you could be right? It could be a very strong play. I know we are trying to work with the UAE right now on swap lines, right? Because the UAE, they can't sell any natural gas. They can't sell any oil. I know that we are opening up swap lines, right? So their access to dollars. I'm sure we'll do it with the Kuwaitis, right? All of those strings attached, right? Why do I feel like this last week, the UAE was buying a lot of 4-week and 8-week treasuries to be in the good graces of the United States. But I hope people are aware of how big these numbers have gotten. And I guess it would be one thing if I was sitting here telling you guys, oh, by the way, the Treasury now has $2 trillion in its checkbook. Okay. I mean, still not okay, but okay, right? At least, no. They just did this last week, and they only have $1 trillion. That's it. They had to literally raise half of that last week alone. So it's becoming a bigger problem. I know, here's the good part. Nobody's looking. Nobody's paying attention, right? And by the time everybody figures it out, this is part of the reason why I was like, hey, don't be shocked by a big stock rally. The amount of money, it's insanity. It really, really is, and it just doesn't seem to stop. But right now, the Dow's down 200, the S&P's down only 15 points, the Nasdaq's down 100. The 10-year note, here's the problem, 434. Uh-oh. And I just told you all this short-term stuff is in the 3 6s. It's not going to be enough. What happens when they come out and say inflation is 3.6, 3.7, 4, right? Already, they're already headline inflation's 3.3. Gosh, is it really worth buying any of that short-term stuff? right? You're going to buy it, and let's face it, they know the government lies, right? And the biggest reason they buy treasuries is so they can buy oil, right? So that's not at 3.3% inflation. It's going to be interesting. Speaking of oil, up $3. Okay, and again, these prices don't really mean anything, right? Because these are contracts that at any moment, any country, any producer could just declare a force majeure and they don't get it. But NYMEX crude, $97 and change. Brent, $109 and change. Of course, add about $30 to $40 to that number if you need to buy crude oil on the open market. And again, the problem is how many people that buy oil were listening to Donald Trump and say the war's almost over. Oh, come on, let me wait. Right? I don't want to lock in at 97. Right? Let me wait. Well, if you waited too long, you're not going to get 97. You're going to get like 130.
I saw a Saudi Arabian finance guy saying, that's just, you shouldn't even be looking at that price. It's the other price, which the spread is bigger than it's ever been, I guess. But he said the barrels over there are selling $130, $140, $150. He said that's the physical price. So if you were buying gold, we have a physical price. Sometimes it doesn't match up to the spot price. Well, that's happening in oil. They said, look, it's way, way more expensive.
That's a great analogy. That's a great analogy. You're sitting here. Let's give you this. Right now, gold just was only down like $10 all day. Just kind of fell here, down $35. It's $46.75. I'll sell you $20 gold pieces. Liberties or Saints today, $46.95. So that's $20 over the spot price, okay? So now I just told you NYMEX crude is $97. Nobody can buy oil today, and I don't care from where, from Texas, North Dakota, wherever else the hell, Cushing, Oklahoma, you are not buying it for $97. Brent, $109. Go look. $140. Maybe if you're lucky, you could get $130. Right? But you're looking at markups of 40%. Right? And this tells you, when does this, we know this with gold. When does this happen? Remember gold during the financial crisis. You couldn't buy gold anywhere near spot. How about COVID? Couldn't buy gold anywhere near spot. Right? Why? Supply and demand. When demand overwhelms the supply, the paper price, what we like to call price, right? Wall Street's supposed to be price discovery, breaks. And this is exactly what is happening in the oil markets right now. I'm watching unleaded gas. So just unleaded gas, $3.51. $3.51. That is wholesale. That is the highest that I've seen it. Jason, what's gas in Colorado? I don't even know. What's gas there?
Well, I'm buying the premium right now, so I'm not sure what because of that.
Because Colorado always has cheaper gas.
It's $3 It's $3 and change. I don't know where exactly. I haven't been paying attention that closely.
We're $5, right? Pretty much $5 here.
Premiums for something
cheap stuff.
Cheap stuff, I think, is $3.70, $3.80, something like that.
Yeah. Okay. Yeah. And it looks like, right, that's about as cheap as it's going to get. We'll see. And again, remember, it's not just the oil part. It's everything else that comes with the oil, right? Diesel fuel. Diesel's ridiculous. Diesel's like $6 here, over $6 here. So it's going to be interesting. We have to sell debt. Oil's the best way to do it. Nobody can get any. I don't know. It's good. I don't know. Yeah, we're back to the I don't know show. But here's what I do know: buying gold at now $4,678, and I've got 20s at $4,695. Back the bus up on that. Right now, silver $75, down about 50 cents. But when we get back, man, I told you last week about how much silver China engulfed, but we have another big silver market squeeze. The tightness continues. How long until it breaks? That's coming up next. 800-951-0592. Patriot Radio News Hour, $20 gold. Wow. Just keeps getting better. Gold's $46.82. So $13 over. You're probably going to be, like I said, gold was $4,700 a change all morning. So you're almost back to buying $20 gold at spot here at 800-951-0592. We have, again, this time it was in the silver markets, the Global Silver Institute came out with their numbers that are pretty much what everybody's numbers are, which is 6 straight years where demand has outpaced supply, lack of supply available. We're going to have periods of extreme volatility. So there will be months where we'll see, and, right now, a 50-cent move in silver is nothing anymore, right? Even $1 is like, big moves. 5, 10, maybe even more in single days. We saw that a little bit earlier this year. Thankfully, Iran kind of took it off the headlines for a little while. But the numbers continue to get worse. They're blaming this on a few things. Number one, there are not enough silver mines that essentially just mine silver. Most of the silver, this is what makes Mexico so important. They have true silver mines. But most of the rest of the world's silver is a byproduct of mining something else. Right? Is it copper? Right? Is it whatever? I don't iron ore, blah blah, whatever. Gold. I mean, rarely do you, sometimes you have mines that have silver and gold in them, but it's a byproduct. In other words, hey, our core thing is we're mining this, but we get some silver to go with it. What's wrong with that? Nothing. With the exception of the price of silver isn't the mitigating factor as to whether or not they should try to mine more, right? So let's just say they're mining copper and they're getting silver as this byproduct. And, you're like, well, gosh, Joe, the copper price doing pretty good. Yep, it is. But depending how much copper they're getting and how good the deposit is, that miner may be like, you know what? Really doesn't make sense for us to go to max production because of, this and that and blah, blah, blah. And the ability to get more silver out of the existing silver mines is extremely limited. Matter of fact, according to the Silver Institute, barely changed. How can that be? I mean, silver a year and a half ago was $20-something. How can it be barely changed? And guess what? If it wasn't for scrap, it would have declined. Here's the other problem, according to the Silver Institute. Industrial demand. The only really big place that they're seeing any kind of demand weakness, jewelry. A little bit in solar, but a lot of people are saying, well, the Chinese just took care of that, right? We talked about it last week. China just bought the most stupidest amount of silver the world's ever seen. The Silver Institute said the problem with the very small, almost negligible drop in demand on the industrial side, compounded with almost no increase in the mine supply, is that investment demand has exploded. You know, buying silver bars, silver coins, yeah. And has more than offset any decline in the industrial demand, and has now made the deficit even bigger than it was the year before. So Jason, essentially what the Silver Institute is saying is, the silver market is super, super, super tight, and everybody better just wait because eventually the rubber band's going to snap, and we're going to see silver exploding higher very soon again.
Yeah, I agree that silver is going up. It's not been clear to me since the Iran war started. The timing it was easier before the Iran war. The timing of this was the rocketing upward, the inflation that was coming. It was all very easy to predict. Now with the war and a whole lot of financial monkey business going on all over the place, it's going to be a little harder to detect the timing of gold and silver going up, gold and silver going down. It is clear that over any kind of a substantial timeline, gold and silver is going to be up and up substantially. The kind of inflation that we're looking at will bubble up into it. Joe, I can't say it's going to snap up hugely right now because there is a lot of funny stuff going on all over the world when it comes to finances. So, listen, a year ago, silver was like, what was it, $29, $25? So sitting at $70 to $80 is pretty darn good. That's a huge uptick.
Yeah. And I'm looking at gold and silver. Have you noticed in the last few weeks kind of gotten boring?
Yes. Yeah, it went sideways. It absolutely went sideways.
I think that's a really good sign. Why? Because now it doesn't matter. Look at today. There is no peace deal, right? Oil's doing whatever it does. And they're just kind of sitting there going, boring. Silver Institute is saying, hey, maybe not this month, maybe not next month, but boring is not what the supply and demand fundamentals are saying. When we get back, I'm going to give you a silver special, gold special coming up. 800-951 0592. Really quickly, some of you have been waiting for Silver Eagles. They are landing in both Phoenix and Colorado today. They're supposed to anyway land here today. So
yeah, I haven't got my hey, it's coming for sure today. That email like I usually get.
Yeah. So we're fingers crossed. They're supposed to be here today. If not today, they'll be here tomorrow. But here's the deal. So we got $20 gold pieces. You can pick them. Saints, Libs, I don't care. $46.95. Right now, gold is $46.80, so $15. Silver. I'm going to do something that we haven't done, and I hope it's not too complicated. Any 1, 5, 10-ounce bars, any 1-ounce silver rounds. You have to buy 10 ounces. We get to pick. You guys don't get to pick. So I've got some 1-ounce bars. I got some 5-ounce bars. I got some 10-ounce bars. I got some rounds. We pick it. You just order in 10-ounce increments. Every 10 ounces, $800. So that's $80. Spot 75 and change. So I mean you're not paying. Guys, that's not even 10%. You're great value. Just say I want 10 ounces. I want 20 ounces, 30 ounces, 40 ounces. We will fill it with what we have. So it could be 1-ounce bars, could be 5 ounce, could be 10 ounce, could be silver rounds, could be a combination of them all. But you'll be getting 10 ounces at a throw for $80 at 800-951-0592. And, again, be smart, right? We had the volatility when the whole war started. Now here we are, month 3. We're now at the boring stage for gold and silver. Kind of not really reacting to the bad oil news like it was earlier. And then as the supply demand, especially in silver, the math just doesn't work very well. There isn't a lot of silver out there. You saw when the price dropped, what did the Chinese do? They literally bought 300% more silver in this March than they did last March. Remember what happened in March? Well, the bomb started flying. Silver was over $100, right? Went all the way. Went down to about, 70? And China just basically said, thank you very much. We'll take all you got.
Yeah, that's going to keep happening. It'll keep happening. So it's been, it's a kind of a broken record since that time frame you're talking about. It's gone sideways. There are too many factors that are kind of working their way into the system, Joe. So let's see how long it stays sideways, and then we'll see what happens after that. Because to be honest, Joe, if there's at some point the markets are going to be allowed to just let off some pressure and just go down pretty hard. But I'm kind of with you. I think the markets are going to just keep going up and keep going up and keep going up because they're going to print, and they're going to more money, and more money is going to be flooding in. This whole year, there's going to be so much money coming in, and even from just non-printed sources, they've loosened regulations on a lot of things. A lot of money is going to come pouring in here. Stock buybacks are going to go berserk. Buying of assets is going to be all over the place. And then we'll see, right, Joe? Then we'll see. That's
right. Then we're going to see.
There's the Warren Buffetts of the world that have pulled a bunch of cash out are saying, I'm not going to wait. And this is going to start happening. All the CEOs are being fired. All of the, as they're pushing and pushing and pushing to drive these stocks up, the big players are going to hide behind that and pull their money. And one of the big things is maybe the stock market goes sideways, Joe, and just goes up a little bit because big players pull as this funny money comes in from overseas.
There's been talk this week and this weekend, because I keep telling you, hey, I think stocks are going to still rally. To Jason's point, that it's gotten so overinflated. That maybe that call isn't quite right. We'll see. I think there's still an avalanche of spending that's going to occur. But
the problem that these big holders of these stocks have, Joe, is you have to have a buyer. There used to be that the small guy used to have a percentage of the market, and there was some influence there. If someone like, I don't know, Mark Zuckerberg wants to dump a bunch, or Elon Musk wants to dump a bunch of any kind of stock, you kind of have to go around and make sure you don't put too many ripples in the water, and you got to kind of come up with a deal, right? And so it's hard to dump, because when people start dumping stock, where's it going to go? Who's going to buy it? Well, a couple of big guys say, I want to dump it, and the other big guys don't want it. Then it's who wants to get the lower price. And as the price starts to go down, it forces the other big players, you know what, I don't want to lose that much either. I better start dumping mine. Right, Joe? And this next market crash.
Funny, this is kind of what they were saying, which is, what if the dumping starts?
It'll be hard to stop.
Is
really
it
hard.
Going to be able to stop, right? That's the fear, and I don't know.
It'll stop.
It's interesting, though.
It'll
That's
stop when
exactly what people were saying. Hey,
it'll stop when Warren Buffett and the guys that already have cash in the sidelines decide it's low enough to start buying again. That's when it'll stop, Joe. Yeah. The guys that are already out.
Yeah, right. And right now, the Warren Buffett indicator, the highest level ever, taking out the .com bubble. We'll be back. Final segment coming up. 800-951-0592. Patriot Radio News Hour. Joe and Jason. If you're just joining us, $20 gold pieces all the way down to $46.95. Just down right near spot, within, $18 of spot right now. And then 10 ounces of silver. Now, I get to pick it. It could be a 1 ounce, a combination of 1 ounce, 5 ounce, 10 ounce bars, 1 ounce silver rounds, $80 an ounce, or $800 for every 10 ounces of silver at 800-951-0592. And, of course, we talked today, right? Debt problems, the amount of debt, and more. Now, the concern, the debt's already really high, but is the amount they're having to roll over in such short term. Short term, 4 to 26 weeks, so 1 to 6 months. 480 billion this week. What was it? 2 weeks ago, it was like 600 billion. It's just this avalanche of debt, and now we'll see. I still think we're going to see an everything rally. Jay Powell, remember Jay Powell, this is it. This is his last meeting this week. And it's going to be the Kevin Warsh administration, and all right? Oh, we're going to make it so inflation's going to be lower. Whoa, how are you going to do that? Well, we're just going to stop counting stuff. Well, okay, well, what stuff are you not going to count? The stuff that goes up a lot. Yeah, we're not going to count that, right? And we'll just count up the stuff that doesn't go up a lot and see if that will work. Rate cuts will be coming. So here's what are we really getting ready for? In the next 90 days, rate cuts, higher debt levels, right? Because we know they still haven't paid for the Iran war. This thing now we're on month 3, on top of quantitative easing, right? This was supposed to, right? We're supposed to be winding it down. I think what we're going to end up seeing is a wind up instead of a wind down. And again, I think we're going to see the continuation of the rally in gold and silver, obviously because that's what we do, but a lot of the what I'll call the base metals as well in the second half of this year. So buy while it's down here. Buy, I think silver and gold have kind of said, hey, this kind of about as low as we really like going right here. Silver doesn't like the 60s. Gold doesn't seem to like it below 4,500. So, Jason, we're kind of in this boring sweet spot right now.
That's where we're at. It's a good time to buy if it's going to go up. And the only thing I can't determine, Joe, is there's going to be a market fall, but it sure seems logical to me 2027 to 2028 when that will happen, especially late 27, mid to late 27 to 28. So a good time to acquire right now and be in place before, let's just say, with all the weird stuff going on in the news, Joe, I think it's going to get actually way weirder in the next year to 2 years. It's going to have to.
Where's Weird Al when we need him? God bless everybody.